Great pleasure again to interact with you for the Qtr1 FY19 performance. A couple of months ago, we met and we discussed in detail the performance for the Q4 FY19 and also FY18. And at that point of time, we had identified and we have shared with you our growth. We also shared with you the stress area which are pinching us and also our strategy, the way we are approaching those issues. I remember we had shared that the stress in our legacy assets continues to occupy our prime attentions. Growth is important, but at the same time, the consolidation in terms of distressing out the stress assets was equally important. And our focus continued during this quarter. And as I come and share my thoughts later on, I'll deal with as to where we stand in terms of the stress portfolio resolution, that primarily our legacy assets. In terms of the thermal and the large hydro. I'd also share the last occasion that our balance sheet has a twin face, one in terms of the legacy assets and the another in terms of the assets which is renewables and which are non-thermal and non-large hydro assets. And I'd share that as far as the other part is concerned, that is our current business operation is concerned, we continue to have a strong business model. We continue to have a strong financial and operational performance. However, the stress assets, the continuing effect of the stress assets on our balance sheet has to an extent adversely affected the numbers arising out of the balance sheet. And to some extent, as I explained to you later on, continues during this quarter. As we move forward to the next quarter and the subsequent quarter, we would see that lessening of the impact of the stress assets on our quarterly performance. Before I come to you at the discussing macro level of our initiatives, I'm sure Dr. Pawan Singh, my colleague, would take you through in details the performance for this quarter. Let me first, as usual, share with you as to what is the sector looks like today and how that sector is how the trends in the sectors are impacting us. We all know the power sector is at the crossroad, and that's not unusual. Power sector is in the habit of remaining at the crossroad. But what is different in the current times is that the areas of focus, there is a shift in the areas of focus. In the earlier quarters, maybe 2 quarters, 3 quarters before, what we were discussing was the bottleneck in the generation, transmission and the distribution. We were bothered about the state of health of DISCOMs, we were bothered about T&D losses, we were bothered about the tariff rates, we were bothered about the cross subsidy, we were bothered about the transmission bottleneck, we were bothered about the regulatory issues. Those issues still remains, but possibly what has come to the front is the stress assets which are facing the sector, which are facing the financial institutions and the banks, which are financing the power sector projects. The exposure of the banks and financial institution is more than 5 lakh crores, and that's a huge amount. And the government has taken various measures which are legal, which are regulatory, which are structural, and these measures primarily aim at one, either to hold the assets, manage them, and once the sector improves, or the value in those assets improves, divest them to the new investors, or attempt the resolutions through the exit, maybe exit through the IBC or through the new investor in whatever way possible and within the limited time as is feasible. we have seen the expectation of the sectors and the stakeholders were towards the Allahabad High Court judgment, and every one of them, if were waiting for the outcome, which we came to know recently, and the judgment didn't defer the 27th August deadline, and so the impact of the non-extension is obvious. Of course, there is still some timeline within which what could not be achieved by 27th August in terms of the OSB and OSDR assets that can still be attempted in the next couple of weeks. So that small window is still available. We in the PFS are conscious of the stress that our balance sheet is affected with, the magnitude of that and impact of that on the balance sheet as such and the possible growth. And we have been sharing with you the various measures that we have been taking. Our purpose, our aim is to keep our balance sheet healthy. And the second is that organize our strategy and operation in such a manner that we are able to prevent this stress henceforth. We are able to reduce the stress that already exists in our balance sheet and reduce that expeditiously and as early as possible. And thirdly, take the corrective actions which requires to resolve those stress assets. I shared with you that we have introduced a focus strategy in terms of the resolution of stress assets, and the result of that focus strategy has been quite encouraging. As later on, Dr. Pawan Singh would share with you the stress and the magnitude of that stress. But if you look at the outcome of our initiatives is that out of the projects which are non-performing, about 6 to 7 of them are at the NCLT at various stages of resolutions, and about 3 projects are before the ARCs, and 2 projects where the investors have shown the interest, and those are at the final stages of taking a decision at the institution's level. So that's a quite a satisfactory progress in terms of the resolution of fixed assets, stress assets. I shared with you that in the last quarter we had resolved a case. We had filed the resolution plan with the NCLT, but because of the legal problems, that is still not yet resolved, and we believe, as per the dates given by the NCLT, that should stand resolved in next 2 to 3 weeks. The other cases of NCLTs are also progressing well. Let me come to the overall performance that we had during the current quarter. The results that we have shared with you would indicate and the nature of our balance sheet, which I said is a twin balance sheet, and also the implications and the impact of stress assets on our currently a normal business model. If you look at the balance sheet or the results, our net income is on increase, our total income is on increase, the percentage of net interest income over the interest income is 30%. That is fairly good. And if we adjust our revenues and profit before tax and profit after tax for the impact of the stress assets on our revenues, because on a Y-on-Y basis, in the first quarter last year, we had recognized interest on certain assets, which later on turned out to be NPA, and we had to reverse that, and we are no more recognizing interest on that. So if we exclude that, just to assess the efficacy of the business model that we are currently have, and also our non-stress portfolio, our profit before tax, adjusted profit before tax is of the order of 132 crores and the profit after tax is 86 crores. And this indicates a fairly good improvement on a comparable basis on year-on-year basis. Let me tell you that this figure comparison is only to indicate the robustness of our business model. The fact remains, no doubt, in actuality, the profit before tax and profit after tax on Y-on-Y basis has reduced during the Q1 FY19. If you look in terms of the parameters of our profitability, which are largely the yield and the spread and the NIM, the bare figure, as we see from the results, would again appear to be dismal in the sense of comparison on Y-on-Y basis, and they would appear to be fairly stable if we compare in terms of the Q4 FY18. But if we adjust them for the impact of the stress assets, interest income on the stress assets, the yield improves to 10.65%, the spread 2.47%, and NIM at 4.16%. This indicates improvement over the ratios in the Q4 FY18 and quite comparable, though not better, with the ratios of Q1 FY18. In terms of the growth in the performance, we have sanctions which have been of the order of 1,712 crores during the current quarter, and the disbursement of the order of 1,190 crores. The numbers are not important to us, but what we can only say is the quality behind these numbers is equally very good. And we have been sharing with you our approach to the sanctions, the process that we follow, the rigorous process of due diligence that undergo before sanctioning of a loan, and the selection of the projects and the promoter. And as we have been sharing that considering the sector-related issues and the scenario, our focus has been only with reference to the tested promoters, that is, who have a track record with us, or with the projects where our existing portfolio have shown a satisfactory performance. Just to tell you that in the renewable space, the wind and the solar, we have about around 92 projects which we have sanctioned, which are currently in our existing portfolio, and out of that 83 projects are operational. So they have reached to a maturity stage, some level of maturity, and the stress in these accounts is bare minimum, much less than even 1%. And whatever small stress that we have in one or two assets, where we have reached to a finality to resolve in the next couple of weeks. Coming to the stress as a whole, if we exclude the thermal and the large hydro, our portfolio is 82%. On that 82% portfolio, the stress is around 2.5%, excluding the 3 projects where we are expecting a final resolution in next 2 to 3 weeks. As I said, the stress has twofold impact. It affects our current level of performance, it impacts our interest income, and it also impacts our ability to grow further, because at the end of the day, it affects our capital adequacy ratio. This year, when we have prepared our results, we have been guided by the IND-AS, that is the new accounting standards framework that has been made applicable for the NBFCs with effect from 1st April 2018. And that means that the quality of portfolio that we assess and we provide for in the financial statement is based on their long-term assessment on the quality of the cash flow, rather than on the basis of the incurred losses in the erstwhile accounting standards. That meant a great deal of exercise going into each of the project that resides in our portfolio. We have undertaken that exercise, and we have undertaken that exercise with an external, highly reputed agency as well, just to see that our assessment conforms to the quality of the portfolio in fact. And on that basis, we have classified these accounts into stage 1, stage 2, and stage 3. Dr. Pawan Singh would take you through in detail. And I would only say that what we have been sharing with you in terms of the stress that we have in our accounts for quite some time, we do not find much change in that. However, the strategy to resolve those stress is leading us to a very satisfactory results. The capital adequacy ratio we have is 19.24%, which is fairly good. As we move forward, while we have made enough provisions for the expected losses, as Dr. Pawan Singh would explain, but as the things move forward, we would deal with the situation and provide for in the financial statement if need at all arises. We believe that the FY19, end of the FY19, we should be able to address the entire stress in terms of entire stress which is on our balance sheet. On the whole, I would say that for the coming quarters, our focus is on consolidation. Our focus is on the robustness of the portfolio that we have. Our focus is on growth, but a growth which is highly calibrated and a growth which is highly quality growth. With that, I would hand over to Mr. Pawan Singh to take you through in detail the highlights of the performance during this quarter.
So, good evening to everybody, and thank you, Dr. Haldia, for giving me this opportunity. Dr. Haldia has very elaborately given you the background, the status in terms of how financially we have performed, the issues which have gone behind this financial performance and the results, and also he has covered upon the issues of the sector, including issues of the sector affecting PTC Financial Services. Some of the numbers also have been run by him, and I'll try not to repeat those numbers which have been run by him. But some of the significant numbers I would like to maybe share or reiterate is our total income this time has gone up from 290 to 325, and our net interest income stands at 90.43 against 90.31, notwithstanding the fact that roughly about 50 crore of reversal, the interest income which we had accounted for corresponding quarter in the previous year has not been accounted for. We have profit before tax at 84 crores and profit after tax at 50.93 crores. Our net interest margin stands at 2.85 and against 3.13 this time. There is a slight drop there, but if we take the adjustment which we have mentioned on account of non-booking of interest on the stress asset, the adjusted net interest margin would have been 4.16. Similarly, our spread this time is looking slightly less. This is roughly about 1.16. But if I take the factor which I have been mentioning or Dr. Haldia mentioned, then the spread would come to 2.47. Our cost-to-income ratio, of course, has substantially reduced compared to the corresponding quarter of the previous year, and that is also on account of reduction on certain expenditure and also on account of higher interest income. And the cost-to-income ratio stands at 7.99 today against the 11.37 in the previous quarter. Capital adequacy ratio stands today at 19.24, which is still fairly healthy, and this has reduced from previous quarter. It was to 21.19. This is also on account of the introduction of Ind AS and also on account of increase in the loan book size. The significant part is that the cost of funds we have been able to reduce, and we have been able to bring it down from the previous quarter 8.29 to 8.18. So this is what the key parameters or key results which I felt that I should be sharing with you. And we also have details of the stress assets which we have in our book. The important fact here is that the gross NPA from the previous quarter has gone up from 6.54 to 7.68 because on account of slippage of one of the assets which was in the stress asset to the NPA category. And the net NPA, however, has been reduced, and because of the provisioning which we have done in the current quarter, and it has come down from 4.16 to 3.63. As at the beginning I had mentioned that we have for the first time moved from IGAAP to Ind AS, and because of that the reporting format, you would find that there has been modifications, and the new accounting norm provides for reporting. One is on the basis of expected credit loss. So far we have been doing it as a industry practice or the prevailing accounting norms on the historical basis, but now it is based on the expected future credit loss, and it is a granular model, which and then Dr. Haldia mentioned that we used a very strong professional agency to do our expected credit loss, and that agency has been working in infrastructure sector as well as power sector and have a good exposure to the risk matrix which is prevailing in the sector. So now we have, instead of the earlier reporting which used to do as how many cases under SDR or S4 and under NPA, instead of that we have the categorization of stage 1, stage 2 and stage 3. Normally for our purposes we have included assets which are highly impaired or the assets which fall into the NPA category into the stage 3 reporting. As we go through the question answer, we would at that stage probably also address on the specific issues of provisioning, if any, against specific assets. And we would also like to answer any questions regard to your understanding of how we are consolidating and how we are moving ahead in our business. Thank you very much.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets when asking a question. We'll wait for a moment while the question queue assembles. We have a first question from the line of Vinod Malviya from Florentry Advisors. Please go ahead.
Hello. Good evening, gentlemen.
Very good evening.
Yeah. So my first question is, can you name the asset which has slipped from stress into NPA?
This is Athena, Chhattisgarh.
Okay. And the second thing is, if I look at your P&L, the amount of provisions which you have shown over there is only 17 crores. But I think under India's, the ECL which you have done has been directly adjusted against your net worth. So it would be very helpful if you can provide what was the total provisioning done in the quarter, especially on the GNPA book and the restructured book separately.
Yeah. So additional provisioning on account of ECL has been 167 crores.
Okay.
And additional provisioning on account of stress asset is 317 crores.
317
crores. 17, not 70, 17.
Okay. And okay, fine. So total of almost close to 390 crores of provision has been done.
No, 160. We said that incremental on account of ECL losses 167.
Oh, 167 you said. Okay.
Yeah. And incremental on account of stress assets 370.
Okay. Okay. So right. And Dr. Haldia also talked about there are around 6 to 7 assets under NCLT and around 3 projects under ARC and 2 projects for new investor. Can you provide which are these assets and what was the likely hit you need to take on these assets in each of this category?
The cases of the NCLTs that are under reference are both where we are the sole lenders and which are under the consortium. The cases where we are the sole lenders, that goes as a Rajpura, which is a hydro project, which are where the final resolution has taken place, and the NCLT has to approve that. So we are waiting the outcome of that from the NCLT. And the second project that we have is the NSL Nagapatnam, which is before the NCLT, and the other projects which are under the where we are not the lead lenders, where the matters are moved to the NCLT or are like Surana Power, Kohinoor, then is Gati and Athena.
Okay.
So these are the cases where the lenders have taken the decisions and they have either moved or the reference has been accepted or they are in the process of moving into.
Okay. And so in the cases where you have referred to an NCLT, what is the likely hit you need to take? Like what could be the recovery?
What we have done is that in those cases the expected credit loss has been assessed based on the current stage of those projects and based on the collaterals that we have. And we have provided for those individual cases specifically. So what the figures that Dr. Pawan Singh gave to you earlier,
right,
about 300 plus crores,
500.
About 500 crores, he says. That includes those accounts.
Okay. And you talked about 3 projects have been referred to ARC. So which are these 3 projects?
One is the Shaliwana. This is renewable energy wind energy project.
Right.
The other one is Sispara. No, Sispara is one. The other one is the Raigad Champa.
And Shaliwana.
And the third one is the Shaliwana. These are 3 projects.
Okay.
They all in terms accounts for around 200 crores rupees or 100.
And the two projects for where investors have shown interest, one is Prayagraj, definitely.
Maybe the numbers, the amount I do not give, but the numbers that we have, they are the proposal is in the final stages of consideration,
Right.
and hopefully some decision will be taken in the next maybe 3 to 4 weeks time.
Okay. Right. And the two other assets where investors have shown interest, which are these assets?
So that assets, that's what I'm saying. If we can share, we can can you share that?
So actually, you're talking about the stress assets, which you...
Yeah, stress assets, right? Okay.
This is Prayagraj and SKS.
Yes, in Prayagraj. Okay. And so the total on the, you're still on the GNPA book, you have a net exposure, net NPA of around 500 crores now. And on the restructure book is around 300 crores, even after doing provisions of 500 crores. So almost like 800 crores is the total stress, including your GNPA and the restructured book. So out of these 800 crores, how much further provisioning you may need to take?
I'd like to answer this.
Yeah.
See, this provisioning on the stress asset, what we have done,
Right.
is based on, see what we have done this time while we have done the provisioning. We have gone for the 3-stage provisioning. Minimum as per the RBI requirement has to be met.
Okay.
Then over and above whatever comes from expected credit loss model with application of Ind AS, that has been done.
Okay.
Then whatever reserve price of valuations we have received or bids have been received, that further has been provided for. Now, in case of these two assets which I mentioned, which are stress assets,
Right.
we have provided for 367 we have provided for.
Okay.
And balance whatever is there is available in the bid amount which we have received. And that bid amount may marginally also improve. So,
Okay.
full, whatever value we are likely to receive has been factored in the provision. As far as the NPA assets go, we have done close to over 50% provisioning.
Yeah.
Now, as Dr. Haldia mentioned, Sispara and Raigarh Champa and Shaliwana have gone into your ARC, and there we have been able to get close to 70 to 100% realization.
Okay.
Balance asset, as Dr. Haldia mentioned, would be resolved either through NCLT or through resolution mechanism based on the collateral available, or in one or two cases through ARCs. So there, we hope to get ranging from anything from 25 to 60% realization should be possible. So that makes an average of about 40-45%.
So, on the restructure book, coming back to your restructure book, the RKM Powergen was also part of a restructure book. Is there any change in the RKM Powergen? Is it been classified as a standard asset now? Because
it continues to be classified as a standard asset, and we have made substantial provisioning against that, though it is a standard asset based on the ECL mechanism, expected credit loss, whatever has been determined. However, it is an advanced stage of resolution that whatever bid price or the settlement price, it's not a bid price because the settlement is happening with the existing promoter. So whatever is the offer on which the settlement or RP4 rating is available. That has been factored in.
Okay. So,
Sir, I'm sorry to interrupt. Would you like to come back in the queue?
Okay, fine. Thank you.
Thank you. We have a next question from the line of Amit Rane from Quantum Securities. Please go ahead.
Hello. Yeah, thank you for the opportunity. My question is regarding Ind AS. So how much is the amount of stage 2 assets now we have?
Stage 2 we have 1200 crores.
Okay. And sir, how much is the net worth post Ind AS?
Net worth post Ind AS. It is close to, it is 2018 crores.
Okay. Sir, how much is the loan growth that we are expecting for this year?
Loan growth, we will, it would not be possible to give an indicative number, but we would go with the industry trend.
Okay. Sir, I wanted to understand on the thermal exposure. We have around 2150 crore of total exposure. So how much is already NPA?
Out of thermal, we have NPA is about close to 450 crores.
Okay. So now balance is around 1700 crore. So of this 1700 crore, how much is the operational part?
Operational part would be about 1100 crores.
Okay. Thank you, sir. That's it from my side.
Thank you very much. So we have a next question from the line of Aditya Shah from Vikram Advisory Services Private Limited. Please go ahead.
So my question is regarding the 2 to 3 projects where Mr. Haldia said that, he expects a resolution in just 2 to 3 weeks. So I would just like to know what is the value of stressed asset, what is the value of that those 3 projects, and how much provisioning is already done?
Yes.
So these are the projects as I had mentioned, in reply to one of the questions, that these 3 projects are Sispara and Raigarh Champa, and third is Salivana. So they are being resolved through ARC mechanism, and they are on the very advanced stage of resolution. Maybe very soon it should be resolved. So the Sispara, we have got close to the value of the loan. And in Raigarh Champa, we have got close to 70%. And in case of Salivana, again we have got close to 60%. And provisioning we have already made, on the balance amount we have already made the required provisioning.
Okay, so there would not be any further provisioning on that.
These 3 items, no provisioning.
All right. Okay. So, sir, apart from that, just in totality, the value of I would just like a breakup of the total value of stress asset. How much of it is NPA and how much of it is provided?
See, we gave you a number of stress asset. We gave you a number of 90 about this plus we have gathered 17 plus 17. So we gave a value of about 1850 crores.
Yes.
Now out of this 850 crores, 1000 crore is NPA.
Yes.
1026, and balance is stress assets.
Right.
Now, against the stress asset, we have already made a provision of 438 crores.
Okay.
And in case of NPA against 1026,
50%.
we have made a provision of 529 crores.
Okay. Okay. And how much of the pending provisioning that we currently hold in respect to both NPA and assets do we expect us to provide in this year?
No, we have already answered that question because it was said that on the balance amount, because I said that in the stress asset, we have already got the bids and
Right.
taking that bid into the factor, whatever was
You have already
provided for.
Yes. Yes.
And
So
that we
stress
gave
asset is over.
that we gave an indicative number on the NPS also.
Okay. So we do not expect sort of any further provisioning, major further provisioning this year, right? That is what I can get from you.
No, it is difficult to say, but as I stated earlier, that we have done a very robust exercise, and we have done whatever that expected credit loss that we expected, and including in the process one of the reputed expert agency. And so our understanding is that we have made whatever that we were expecting as on date. Now, saying that they would not be requiring, maybe it is some type of an, futuristic call. But we can only say that if we are required to make, that would not be as significant as we have already made the provision.
And very marginal.
And maybe to the extent of the incremental amount may not be that significant as we already made.
All right. All right. Thank you, sir.
Thank you. Anyone who wishes to ask a question may press star 1 on your touchtone phone. We have next question from the line of Sagar Shah from KSA Securities. Please go ahead.
Good evening, sir.
Good evening.
Yeah, my first question is regarding actually the Feb 12 circular, something like the 3.8 lakh crore power assets. So out of that stage assets, PFS, what is the exposure of PFS or to those assets, and what is the provisioning being done if at all we have a exposure over there?
No, if you are looking at the 12th February circular and the first list out of that, I believe we need to check. I don't think we had any exposure to any of those 12 projects. But when the subsequent list came out, we would have the exposure. We would have the exposure of the Prayagraj, SKS, the East Coast, and the Athena Chhattisgarh. And if RKM is listed there, I'm not sure, then the RKM. That's all.
Okay, so something like for that, how much provisioning, sir, have we done?
We have already answered that in the previous two questions we were asked. We can repeat the numbers. We have said that on the stress assets, we have already made a provisioning of, 428 crores.
428 crores.
Yeah.
In the two of the projects, in another one we have made about 45 to 50% of the provisioning. And for the RKM, Dr. Singh had explained you where we stand.
Okay. And my second question is, in the stage 2, you just said that you have an exposure of 1200 crores.
Yeah.
So in the stage 2, how much, as per Ind AS, how much provisioning have you done for the expected credit loss, or are we still pending?
We have done 430 crores.
430 crores you have already done. Hello?
Yeah, 430 crores we have done.
430 you have done. So the remaining has to be done in FY19, if I'm not wrong.
If it is at all required.
No, this stage two, as we said, are mostly the cases. Larger amount would be the cases which we have mentioned in the stress. They would constitute almost 80% or 90% of what the figure we have told. And that we have said that against whatever expected bids we have received, the gap we have fully provided for.
Okay, you have fully provided for that.
Yeah. Between the bid amount and the, provision we have made. If we add the two, it will almost reach the total figure.
Okay. So something like, as you are saying, 82% of your book is excluding the wind and the wind and the thermal energy.
No, excluding the thermal and the large hydro.
Yeah. Yeah, the thermal and the large hydro.
Right.
So out of that, something like 18%, what is the something like likely stressed assets of which we haven't provided for till now? I want the amount, sir, of that 18%.
You want those cases where we have not made any provision?
Yeah, you have not made any provision till now, but you're under watch list actually.
All of these where there was a element of stress involved, we have made the provision. And and if they were in the stage 1, then obviously the provisioning as per requirement of the stage 1, which is stage 1 is a performing asset, that we have done. Now out of these 2,000 odd crores, which are the projects which we have not done? Maybe we will separately tell you, because it has to be culled out, because what we have done is out of this 2,000 crores, we only know what was the case 2 and case 3.
Yeah, but actually I think you just, your CFO sir just gave the figures actually. Out of 2,150 crores, almost like 450 have considered NPA. 1,100 crores is operational and the 600 is the non-operational.
Yeah, you are very close to that.
Okay, so for 600, so you haven't provided till now, if I'm not wrong.
No. Let me again little bit more clear on this. See, out of the 2,000 crore thermal assets we have, roughly about over 400 crores or 450 crores, close to 450, between 4 to 450, we have NPA.
Correct.
Right?
Yes.
That's one. Second is that balance amount, whatever is there, that is coming under the stress asset category. Right? Under the stress asset category, we have said that we have made 50%, over 50% provisioning.
Okay.
Right? Balance, whatever is the net gap on that, the stress asset which we mentioned, is the bid amount which we have received.
Okay. The rest is the bid amount that is likely to be received in the time to come actually.
It has already been received by advanced stage of resolution.
Okay, it's under advanced stage. Okay, my last question, sir, would be something like out of the 2.5, something like 82% exposure, something like we have the excluding, as you said, is thermal and large hydro. So out of that 82% book, which includes solar, which includes renewable energy, roads, etc. So out of that 2.5% you said was NPA.
What is that, please?
So what is something like, have you provided for those assets?
Yeah, certainly, and those are part of the stress assets, maybe stage 2 or stage 3.
Okay, those are part of the stage 2 and stage 3.
Like that includes Shaliwana, that would include Sispara, which the Dr. Pawan Singh said, which will include the Raigarh Champa Rail Infra, where we have already received the ARC and we have taken a decision, and the process of transfer of that loan account to the ARC is already in the advanced stage.
Okay. So just a final question actually. We are seeing the interest reversal on the P&L front actually, as you were saying that we used to credit the last year the interest, even though we didn't receive actually for those assets, stress assets. So something like till what time actually will we finish this the interest reversal actually?
As the quarter moves, maybe the September quarter and at the most the December quarter.
December quarter.
The most, yes.
Okay. Thank you, sir. All the best.
Thank you, sir. We have a next question from the line of Rajesh Nagare, individual investor. Please go ahead.
Yeah, sir. Good afternoon.
Very good afternoon.
I just had a talk, this is a very, that you can manage. I have observed we get notice for concall just 5 hours earlier. And even the statements, financial statements, just 4 hours early. It is very unfortunate that we are working in this fashion. Can't we speed up that we give some time, like 4 or 5 days to the investors to analyze them, to ask questions, and to go through the previous con call? Can't we manage that in a proper fashion? Are we doing even the loan disbursement in such a fashion?
No, at the outset, let me regret and let me say sorry if that inconvenience has been caused to you. Because we had a meeting which continued late in the evening, and after that, since these were the accounts based on the Ind AS, so we were trying to come out with the press release and call out the office was working out on the figures to be given. It took some time, but certainly yes, we could have possibly sent you a couple of hours before than what we did. But 3-4 days before, because as soon as the results are out, the stakeholders would expect this conference to take place immediately on the next day. Because when I told what we call is stakeholders, my officer, as to can we hold it the day after, that is on the Friday. The immediate response came to me, said day after would be too late. We possibly need to hold on the Wednesday itself. So earlier this meeting was scheduled at around 2:30. Then we postponed it to 4:30. We keep this time to 4:30. So while I agree that possibly this could have been expedited few hours before.
At least 1 day before, sir. I'm not saying that.
3-4 days time in advance, maybe more than many investors would be looking at this is too late that they have to wait for the management response. But I would certainly encourage you, and I would suggest my team to get in touch with you after a couple of days. And if you have any questions, that would be in a very candid manner would respond to you.
Yeah, thank you, sir. But based on your last response, even last time also, Ms. Ashima, who is, I guess, working in PR, and she called me after the con call and she said, I had some queries. So she even said that, yes, I will get in touch with you for any query. But now 3 months have passed. Not a single call from her on that front. So even that fails.
Rajeshji, you will receive a call from us 11 o'clock tomorrow morning.
Yeah, thank you, sir. And coming back to the risk, credit risk and everything, I have only one question about that. As I see in the sector, the PPAs are signed. Generally, the PPAs are signed, only then we are disbursing the loans. But if I see the distribution companies are not honoring it, and even when they honor it, they will not pay. And in many cases, they are signing the PPAs, not signing the PPAs. So what recourse we have? And we have no use of unfinished projects. Even when they are finished, power will not be bought. And even if it is bought, we will not be paid. So what do you see the way out of this?
There is a problem, and we do recognize the problem very well. And the way we deal with this is that when we do the due diligence, we take cognizance of this problem and try to mitigate the impact of this risk on the project, performance of the project, and consequently the recovery of our dues. We would see that there are, before sanction and before disbursement, there are the connectivity issues are solved, PPAs are in place, and at the most the problem would be could be twofold. One is that the DISCOMs not paying in time, say if they have committed for 75 days, they are not paying in 75 days. And secondly, the offtake problem, suddenly, they are backing down. These are the two problems. But when we do the due diligence, we try to factor this risk into our the financing model by increasing the debt realization period depending upon which discom we are financing. So it can be from 3 months to 9 months. And secondly, provision for a higher level of debt service reserve, what we call is a DSRA. So that can vary from discom to discom from 1 quarter to 3 quarters, so that if there are delays, if there are non-payments, and if there are backing down, at least the PFS is able to recover the dues. It doesn't mean that the project should suffer while PFS recovers the dues, because that we factor into when we do the profitability analysis. And as I said in my introductory remarks, we have our 92 projects operational. 92 projects in our portfolio. 82 of them are operational, and I can, as a thumb rule, I can say that at least 95% of them, we don't have any problem of delayed payments as far as the PFS is concerned. Now, having said that, let me say that it doesn't mean that the projects will not having a problem with the respective discounts. They might be receiving the payment late, but the promoters that we have selected, they try to see that out of their contribution or out of the buffer capital that they keep to address these kinds of contingencies, they pay to the lenders in time, and there are no default or delays as far as the lenders are concerned.
Sir, no doubt that we are taking care and the promoters are also good. My main worry is the distribution companies, even when they sign the PPA, because the rates are going down, they don't honor the commitment, and that contract agreement is not honored, and that's why we will suffer. So
as far as this problem is concerned, we did encounter these problems in a one or at the most 2 states. We dealt with those problems, and those states signed the PPAs with the projects that we had financed. As after signing the problem, they are not honoring the PPAs. That non-honoring is only with respect to one aspect, that they would not. There is no takeoff of the power, or there is a backing down of the plant. Now that I said that of late the regulators have become slightly more discipline oriented to see that there is no formal backing down taking place. Second thing is, as far as the payments are concerned, it's a discom to discom, and from time to time. At times you find that one discom was very, very regular in payment of dues. After a couple of months, they started delaying. But then it's not that they have been continually defaulting thereafter. Thereafter their financials improved, and they were back on track and paying the dues in time. So I would say that the problem is there. Problem is well recognized. But then that's the risk that the project and the lenders have to address. And I have told you the way we are addressing this problem. But if there are states which are chronic in the sense of delays and the backing down, we have not funded in the past the loans to those states. And those are very obvious. And we said to those states that we will not finance any project in these states because of this reason. And the example to the point was Maharashtra itself, where we have not financed any projects for last many, many months.
No, I understand.
Right.
Yeah, thank you very much. Because I see this is, even last year, the power minister had promised to do something on this. But still this problem has not resolved. And the SEBs are not honoring the PPA, or if they are honoring PPA, they are not paying money because they think that when they get cash, they buy from the exchange. Anyway, sir, thank you very much for your answer. Candid answer.
Our pleasure.
Thanks.
Thank you very much, sir. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for closing comments. Over to you, sir.
Indeed, a great pleasure. And as usual, whenever we have been interacting with the persons of your eminence and background with a deep insight into the sector, and at times I feel you have a deeper insight than we in the PFS than we as a management do have, and that makes these interactive sessions more learning and also more introspective for us, and that has been a great strength of these interactive sessions. And I believe and I hope we have been able to explain you the performance, the nitty-gritty of the performance, the intricacies of performance. Some of your questions were very difficult, and we did try to appreciate those questions and have been able to respond in our way. If you still have some questions, I believe Dr. Pawan Singh and Mr. Sanjay would always be available at your disposal. You just send them an SMS and they would be available. If you want to interact with me, just send an SMS and I would see that at the point that you are looking for us, we are available for you. At the end, I would only say that we have been keeping the momentum of the performance and the growth right on the track, and that remains, and I would believe that would continue to remain. But the recent developments that has reflected in terms of the stress in our portfolio, that should and that has in fact taken a front sheet, and in terms of our emphasis and in terms of the management times and attentions, and we are addressing those issues with patience, perseverance and deftness that these issues require. There are certain external situations. For example, the NCLT, while we would like to resolve those cases to the NCLT process as fast and as quick as possible, but then these are the legal matters, and at times they drag on, despite the fact that the NCLT, the law or the IBC has given a detailed time frame and very specific time frame to deal these matters. And at the same time, while we might have the assets, the investors might have shown interest into that, but maybe we feel that the economic value of those assets is more than the value that the investor is offering. Or maybe as the time progresses, the value that the investors would offer might increase. That might make us to continue to hold those assets in our book. Despite, in your perception, we might be carrying a higher level of stress assets, but we think as a management that if we feel we are able to fetch better value without losing the time impact, then possibly it is worth to keep on our balance sheet. And I hope you would appreciate and look at that. We have been our portfolio growth. We have been very conscious. We have been very careful in terms of calibrated growth, in terms of the quality thereof. And also, some time back we started a very calibrated and a limited diversifications into some related areas of economic infrastructure, so that we do not carry the risk, all the portfolio into one basket, and then the entire portfolio suffers with the risk that basket is exposed to. So with that, ladies and gentlemen, we only assure you that we would constantly be at delivering you the performance and the better results despite and given the externalities of the environment. With that, thank you very much.